What's up, good people? Sorry for the delay. As you can see, I got the fam already here. We're not going to waste any time with all of the propers and all of that. Y'all say hello to Stocks with Josh. We got Stock Mo up the top there. We got my man Keenan Grace. Hey, we were having some technical difficulties, but we got it worked out. All right? Gentlemen, starting from Stock Mo, say hello to the people.
Hi, everyone. I hope you're holding up all right. And of course, for those, you're going to have to excuse me a little bit tonight as the core four are back together. I wouldn't miss this for the world. And I'm on day 4 or 5 here of having COVID. So excuse the raspiness. And if I start coughing, don't worry. You can't catch it through the internet.
You know what, Mo? We were all going to just come on wearing masks for a minute. And then
I would have got a good laugh out of that.
Sometimes it's all you need is a good laugh.
Yeah, that's all you can do.
Go ahead, Mo.
Well, I was just going to say, we've seen a lot of things out there. We got the Fed notes. I'm sure we're going to talk about that. And of course, for those watching my channel, you guys know I've turned pretty bearish now. And ever since we watched the S&P 500 get back up to that almost 4,200 level, I've been loading up on the inverse plays. And now I started a new position. We'll share it with the family here that I've gotten back into TMF. And I started buying some of that again this week. And so for those who are wondering how I feel about the future, it's not as bright as most people thought it was in January. Even I was very suspect of that big climb. Oh, wow. You know, you had this huge run from everybody selling in November and December for tax loss. Anytime you have a really bad year, a lot of money, a lot of stocks are sold in November and December. And most likely they start putting that money back to work in January. And that's why you see that, I call it artificial run, because that money is invested now. And now it's in there, and we'll see how they do for the next year. But with bond rates, we're rolling up higher. That gives more incentive for money to move out of the market back into bonds. And there is a chance of something breaking out there in the big global network of finance. And I don't think it's going to be in the U.S. I think it's going to be something overseas that all of a sudden becomes contagious here in the States. And you heard it here first on this live stream that it's going to break the market here in the States. And eventually the Fed will have to do something like pivot, not because they beat inflation, because they got to save the global economic system. And so, yeah, that's my prognostication here. And we'll see how it comes true or not. I don't want to see the markets go down, but everything, with the exception of the unemployment numbers, and once they pass over the 3-year average, it's all but written that we're going to see a recession.
Stocks with Josh. Say hello to the people. Give your welcome, and then we're going to dive into some questions.
Yeah, this is going to be a fire video with the 4 of us today. I think because we're at a critical moment in the markets. Now, I bought a stock today and I sold a stock today. Now, one play, and I'm going to tell you which I did, and then I'm going to let you guys guess which one I bought or sold. Now, one play is super bearish and one play is super bullish. What do you think, Larry? Did I buy the bullish or the bearish play today? Now, I'm going to tell you what they were. Alibaba and SQQ.
You were bullish on those plays. SQQ, that just tells it all right there.
I sold my SQQQ today.
I thought that's what I would have guessed. I would have guessed he sold his SQQQ because it's getting back down to that bottom tracement. And because I even said we're down there close to a bottom, and the Alibaba is looking good. Quantitative easing in China. My man, I in my head, as soon as you said those two, I was like, oh, he loaded up on Alibaba because I've been considering buying Alibaba.
Well, I actually talked about Alibaba this morning on my live, and I said it was looking good. So we're in the same space. All right. Keenan, go ahead and hit him with the hello. And I got a lot of questions, so we're just going to go through a fire round.
Can you hear me now? I got you.
Yeah, we can hear you now.
You put me on the main screen for this one? You got me set up with that or not yet?
Yes, sir. No, we got you. I got one too many windows up here, though. Let me go ahead. Hit him with it, Keenan.
So while we doing that,
Oh,
family, I just wanted to say this, right? First of all, the notification does not go out many times on YouTube. So what I want you to do, since we all here, guess what? We supposed to be here. Hit the like for Larry. Why? So the notification can get out to everybody else who wants to be here, but YouTube just ain't telling them, family. So let's go ahead and let's
yeah.
do that.
Thank you.
And outside of that, I wanted to say this. There was two points that I wanted to make sure I hit. So I'm gonna just hit them right here for you, families. I got you. The first one is I really want you to take the time to learn the charts. If you go back, maybe it was 3 weeks ago, me, Josh, Larry, Mo, we were on here, right? We got into talking about the technicals. The technicals, when we talk about that, we just talking about the charts, how the charts look, the numbers, how the candles are looking. You don't got to get into it too heavy, but you do need to understand supports and resistances at a minimum. When a stock is going up and it hits a resistance, it's resisting going any higher. So then when you buy it at a resistance, this is what we talk about when we say you buying it high. And then it's dropping, and you try to sell out. And now you're selling it low and you got the game backwards, right? You're supposed to buy low and sell high, not this thing in reverse. Now, the reason I bring this up, the resistance line, is because we literally mentioned one of them that's a psychological level of resistance at about 420. Right? Now we ain't talking about April 20th getting high. We're talking about 420, literally ticker symbol SPY, the SPY, right? Fortune 500 companies, it tracks it. The reason we brought this up was because if we didn't break past the 420, then it was very likely that the bulls were going to come in, and we got to about 418. Couldn't get to the 420 and past it. We couldn't get past it. So this was showing us, oh yeah, this is a strong level of resistance. And once we got up close to the 420, started to go back down, and now look where we are. But none of us are surprised because we didn't break into that more bullish territory where you think that the retail investors are the only ones FOMO buying in. No, institutions are incentivized to perform well by their shareholders, by the people who have retirement funds with them. They want to see the institutions perform well too. So the institutions oftentimes will FOMO in when they see a run starting as well, and then they make it a self-fulfilling prophecy. So if we broke above the 420 before, right, there are new resistance levels now. But if we broke above it before in the last 3 weeks, then we would have likely seen even 430. But instead, we're back down here to about 399, 398. And now, with that being said, learn the technicals. Take your time and go and look at that, right? Because the charts tell you a lot. They don't tell you everything. This is why we also tell you what's going on with the Fed, interest rates, inflation. So now I wanted to say this. I had seen a video today, and if the creator ever sees this, I'm not going to mention them because I don't like talking down nobody, but I seen a video today, and it was about how coffee, buying stocks instead of buying coffee, it won't make you rich, right? And this whole video was all about this. It's got hundreds of thousands of views, came out real recently, and great video. I get it. I totally get it. But the thing is this. If you stop buying coffee, or at least slow down on buying coffee, and instead start buying Home Depot, because you go to Home Depot, there are millions of houses in the United States. You go, you see that people are going to need stuff from Home Depot, Lowe's, and you know what? You instead buy Walmart. You instead buy things that you know, love, and use, like Apple products, or you buy Apple stock instead of buying coffee. You only put $5 in. Maybe you won't get rich, but guess what? The version of you that is doing this routine will have a lot more money than the version of you that will not. And that's what I wish the point was made in this video, saying that, hey, buying a cup of coffee, it's not going to make you rich. It's only $5 a day. Listen, family, I wish, and rest her soul, love her to death, my grandma, I wish that she would have had the information back then that we have now and said, you know what? Instead of buying coffee, maybe I buy every other day, and I'm just going to put maybe even $5 a day into Target. I go to Target a lot, or in a Walmart. I go to Walmart a lot, something like that. So then by now, maybe she wouldn't have had a million, but maybe it was 30,000. I know nobody in my family had 30,000. Just, oh man, I just been saving up. I just been investing. No, nobody, family. So it's not always about getting rich. It's about getting improved from where you already are. So then I wanted to just say that because people will shoot you down because you make a small improvement, but oftentimes the alternative is no improvement, and if not, destructive habits. So we got to get up out of that. And that's what message I wanted to just leave y'all with at the beginning of this video.
Okay, so I want to say something to that, and then I'm going to make a special announcement that I promised the people that I was going to make on this video. Number one, that video, I didn't see it, but that's a lie. I can take anybody with $5 a day at 24, and based on how many years the average person works until retirement, with $5 a day, and I'll tell you exactly where to put it. Ticker symbol VOO, the top 500 companies in the stock market. It over the last 30 years, VOO has had an average return of 9.74. Google it. $5 a day for your working life, you will be a millionaire. So I didn't see the video, but it sounds like a bunch of crap. That's what it is. And these are the facts. I want everybody to Google how has VOO performed over the last 30 years, and you will see 9.74, and just plug it in. $5 a day compounded over the life of you working, you will be a millionaire. So that theory, he said, it doesn't is debunked. All right. So listen, I have a special announcement to make, and that is that tonight I am releasing my class in beta. It is the top link below. In my class, it is the ultimate beginner's class. And if you are an expert in stocks and all of that, this is not the class for you. I'm just telling you, it's not the class for you. But if you are a beginner or you know someone that's a beginner, this is a class for you. Now, we're releasing it to you guys for a special price. Actually, it's $100 off, 21% off. And it is the top link below in the description. So that's the news that I've been teasing my family with. And so we want you guys to partake of it first. In this class, there's a gentleman named Stocks with Josh that's actually going to be starting Monday. There's going to be new videos released and every week. And he's got a whole chapter on charting. And I'm going to let Josh talk about that later. Also in this class, after that, we got Keenan Grace is going to be teaching options in this class. So you're going to get a lot of bang for your buck in this class. And this class, one-time payment, lifetime access to everything that comes with the class, right? And while I'm here, so we can get into these questions, I want everyone to go to these gentlemen's pages and make sure you subscribe. Here we go. Here's the class, right? But right beneath that, here we got Stock Mo's link, we got Keenan Grace's link, and we got Stocks with Josh's links. All you got to do is go into your description and hit their links, subscribe. I want everybody to subscribe to these gentlemen's pages if you want to make more money, period. Okay? So that's what I wanted to say off the back. And then I want to shoot some questions and then you guys could add to that. All right. So I want to give a list of questions I want to ask. All right. Well, I'm just going to go through it first really quick. All right. So these are lightning rounds. What do you think about the Fed minutes? Anybody start talking? Josh, you go ahead.
You know what, Larry? I flew in from Peru yesterday night, and I've gotten up and I've been working on taking care of some family matters. I made one video, which I posted about an hour ago, and the only thing I know about the Fed's minutes is this. I did keep an eye on the charts. I didn't hear the minutes, but for the most part, the market stayed flat. So I did not see either a pump up or a sell off. And Larry, I'm going to tell you very clearly, January 30th is when we hit 4,200, but we didn't hit 4,200. We actually hit 4,195. We came short. We kissed that 4,200, and we have been falling the entire month of February. Now, on January 30th, I told everybody that for this micro bullish run to be validated, we had to come back and do essentially two things that somewhat coincided with each other. We had to back test 4,000, which coincided with the 50-day moving average. And if we did that, if we hit that spot and we bounced, then we'd be making a higher low. I also told everybody that if we broke beneath 3,950, we broke beneath that 4,000, we begin to go lower, I believe that the micro bullish run that we've seen that started in October, that's been running about really 3.5 months, is essentially broken down. But I mentioned at the beginning of the video that I bought something and I sold something. I went bullish and bought BABA. And I think that you could possibly, now this, I'm way out there on a limb, but you could possibly have picked your favorite momentum stock and taken a reasonable risk and entered today, especially after the Fed spoke and the markets did not just essentially, forgive me, crap out. You could have
Absolutely.
your favorite momentum stock and you could have taken a position today. And from a technical point of view, that would have been a reasonable risk decision. Now, I gave everybody in my last video, I told them where I put my stop loss. I'm not trading without a stop loss in these markets because they could really fall apart quickly. But
Yep.
we pulled back. If we bounce, which it makes sense, we shouldn't just die off from 4,000. We should make at least a bare minimum attempt to backtest 4,100. That's the least we should do right now, if to confirm that the bullish move is over before breaking beneath 39.50. So I think you could have bought today after the Fed spoke, and I think we should see a little bit of upside, minimum 4,100, but it would not shock me if we go all the way back to retest the highs of this move before the market decides that the bullish run is officially over.
Are you holding long? Myself, I'm getting into plays. I agree. I did some buying once I saw the market bottom out and start to come back after the Fed minutes. That was a green light for me to get into some short-term plays. I did some options, and I got back into GEHC. And you know how I've been riding that like a pony. For my followers, you guys have been making money on that GEHC, which is healthcare. And it's just been going, it's just been working extremely well.
And Larry, can I just throw out real quick before you move on that I also followed you on that stock pick, and I've made a nice chunk of change. I've provided some technicals to my people about this stock as well. And a lot of people that followed me, it was your pick, but they might have jumped in after I gave them some technicals, and people have been making money. That was a great pick, Larry.
Thank you, sir. All right, so I'm gonna just move to the next question. Mo, you have anything to say about that? Because I got a lot of questions.
Sure. You guys know I'm the king of leveraged ETFs. So for those looking to follow in Josh's steps, there are some ways to do that. One, obviously, we have XQQQ, which he sold out of. I get that move. I was actually looking at it today. And when I bought into my stocks over at the Patreon, I ended up doing treasuries. I wanted to get into some triple leveraged treasuries this week because I do believe the pain is about over. There's no guarantee, no crystal ball here like in DC. But I think you saw the dropping, if you will, the prices of some of these treasuries, the yields going through the roof because everybody's expecting all these different rate hikes from the Fed. And I'm going to say this, they overdid it. Just like when it went too low because everybody thought everything was going to be hunky-dory. Now it's gone to the opposite end of the spectrum. And so I've been starting and loading up again on TMF for the family, letting you know, I always say we have everything over there up to the second for the Patreon members, but I always bring it to the family eventually, and now you got it. And so I'm going to be continuing to load up on that. And for those looking for the leverage play, some sort of leverage play for Alibaba, I got one for you. We got YINN, yin. Yin is, as I'm pulling it up right now, yin gives you that opportunity. It's a 3 times China bull ETF, and it does have Alibaba in it. It does have Baidu. It does have JD.com. As Alibaba does, I'm expecting those other ones to do, and you can get 3 times the risk and 3 times the reward. If we see bad things happen between the States and China, well, of course, that's going to take a pretty big hit, and all the stock market is. But as I would think calmer heads would come out and handle these situations in a grown way, that they will work through this, I can see Alibaba absolutely doing well. I thought the same thing that Josh did, that there is some, with the quantitative easing in China, they continue to put a lot of money into the consumer side of the economic structure over there, a little bit different than past times. There is some opportunity moving forward for some of those Chinese stocks to absolutely crush the returns that we have been seeing out of there. They had a rough couple of years because of their extreme, they really attacked COVID and trying to make sure it didn't spread. And that was a lot of lockdowns and other things. Now they are opening fully back up and doing quantitative easing, which should lead to what we saw in the US in 2020 with that stimulus and everything else, and seeing them stocks run. So I agree, Josh. I think the risk reward for Alibaba is that you could see some real nice returns right now with that, especially during the latest kind of pullback. It gives you a better entry point. But I agree, set those trailing stop losses just in case. And like I said, I think right now could be one of the better times to start dollar cost averaging into the treasuries I talked about. And you can just get the straight 20-year, 10-year, 30-year, or you can start to look at some of the things I'm looking at, which is the leveraged for the 20-year. So, that's kind of what I'm looking at right now. And as I continue to look, I have to tell you, I still believe that a recession's on the way. And one of two reasons why these treasuries are going to do so well by the end of the year. One, we have a major recession, everything kind of tanks out, and then the Fed has to cut rates to stimulate. They have to stimulate business. They can't keep going. They're going to force, their hands are going to be forced. Well, I'm going to make it three things. Two, something breaks overseas. Somewhere over the world, the credit market somewhere breaks, and the Fed's forced because it's contagious over to the US, they have to act again. And three, we don't have any of the bad news. It's all gold. The markets are running nice, and everything's a soft landing, which I don't believe is going to happen. And they did what they needed, and inflation drops down to 2%. And guess what they get to do with the rates then? Drop them that way. So any of these situations, in my opinion, lead to that we're almost at the top for the rates. And of course, they're calling for 3 more rate hikes. I'm not sure. I'm not sure if we're going to get there. I know 2 more. I'm not sure if we see the third. And I've been changing my mind a little bit back and forth for that third rate hike. And I think they already have it priced in now. And that's why you're starting to see a testing for the 2-year treasury. And I'll tell you this, I believe the signs, when you look at some of the technicals for the 2-year treasury, if you look at it, going back to November, whenever, I think it was November 7th, and where we got above that year high, and then we crashed back down below. It tried to get above it. It couldn't. And now I think that sets the way that most likely we are near a top for these treasuries. And that's why I've been loading up. So that's my feeling on Alibaba, some of the things I'm watching.
Okay, Keenan. Hey, let me answer a question really quick. This in the class, it's not going to be any live trading and all of that. Keenan is going to do a chapter on just for beginners on teaching options and what they are. Josh is going to be doing a chapter with charting. So you will take the class, you'll get a login, one-time login, one-time fee, lifetime access. That's it. It won't be any live. That's not what this class is about. And it's for the beginner. It's not for an expert. So if you are an expert trader, do not get this class. It's not for you, okay? I want to be crystal clear. So, but a lot of stuff in there a lot of people need. Keenan, how you doing, bro? Wake up, Keenan.
I'm doing good, man. Listen, I'm up.
Like a civilian.
I'm a student of the game. Sometimes it's time to talk, but other times it's time to listen. So I'm just here. I'm taking my notes. I'm listening hard, right? I wanted to say this. I'm so proud of you for letting this class out. And I know even when I was in high school, right? I graduated high school back in the earlier 2000s, right? Like 2009. So back then people were paying hundreds of dollars for Jordans and sneakers and things like that. And even hoodies, right? Yep. I could only imagine if somebody would have spent that same amount of money. I'm talking about every week they were doing this,
right?
On something that would help them to learn, to grow. You understand what I'm saying?
Yeah, something that's going to make them that money back in a week.
Exactly.
On most cases. Yeah.
So what I want to say with that is, whenever you see something and you say, "Oh man, this is a few $100s," you go look in your closet and see if those shoes that you bought are making you any money or really putting that insight in your head. You understand what I'm saying? You go look and you see that nice, whatever it is. Everybody got their own different things. Look at your phone. How many times could your phone have bought you a class like what Larry is offering? So consider these kind of things, right? And also consider, let's say that you already got the skills, but you know that there are people in your life who who don't really have the skills, and you were about to go and buy them something, no disrespect, but something kind of stupid that they're gonna forget about, and you could have really say, yo, look, I bought this class for you that I want you to take.
Right.
And you know, what's going to happen here is you're going to learn, and any questions that you have, I'm here to support you, but I'm doing this as an investment in you, right? Like, think about it like that, right? Think about it. How many times did you get something that you don't even remember what it was? But you will remember if somebody invested into you. I wish that when I was younger, somebody would have had the foresight to invest in me, because then that would even help with my own self-confidence. And I got a lot of self-confidence, you know me, but it would have
Right.
happened a lot sooner because I would have believed in myself a lot earlier. So
Right.
then I want y'all to just really consider what you're saying when you think, oh man, I don't want to pay for this. Pay for what? Pay for your investment into your own future. Pay for somebody else's investment into their future. Think of it just like that.
You know what, Keenan? It's funny. Somebody I know, I talked about it on my page. I was sending them to your Discord. I think the $10 was out, the $5 was out, and it was $10. It was $10 a month. And he complained about, oh, it's $10 a month. I talked about it on my page. He came, and I didn't ask him. He came back and apologized. So he was like, I was complaining about $10 a month. I just made $1,700 a month following Keenan. And I said, you got it. Like, when we first started this, me and a friend in the 90s, we were trying to come up with $10,000 for a class that most of the stuff was above our head. My theory is talk to me like I'm 3. So that's what the class is about. Okay, we'll talk about the class more at the end. Let's get into some questions. Listen,
Let's get it.
soft landing, hard landing, or no landing at all, Keenan? And after you answer that, then tell me what stock you looking at.
I got you. And we're going to keep it so simple. Like Larry said, talk to you like you 3, right? Check this. Soft landing, hard landing, all these landings, right? Replace the word landing when you hear this stuff and think about recession. They asking you, really, are you going to have a soft recession? Not so bad, but still going down. No recession, no landing, right? Or a hard recession. I'm talking about where the prices of houses is literally cutting in half, family. So what I want you to do is be prepared, not surprised. Like I always tell you, 5 P's. Put 5 P's in the chat. Proper preparation prevents poor performance. Say it with me again. Proper preparation prevents poor performance. So listen, I can't tell the future. I'm not, her name shall not be said. Last name Pelosi. I'm not gonna say the whole thing, but you know who I'm talking about here. I'm not her. I can't tell the future, but I know that whatever way it go, I'm gonna be okay. If we have no landing, no recession, family, all my long-term plays are gonna be on a rocket. If we have a hard recession, then guess what? That means all of the things that I meant to pick up, I can pick up now. If we have what we have right now, this is just what we've been doing. We're making some money on the way up, some money on the way down. So you just want to be prepared for however it go, right? And I say it like this. A lot of people come into the game like they're Superman. Think about how Superman approaches an event. Superman shows up to a bank robbery. He just shows up. He's bulletproof. He don't have to think about this. He just running in there, right? A lot of people try to get into the market as if they are Superman. Like nothing could go wrong, right? You ain't scared of nothing. No, you're not Superman. You got to go and enter it as if you were Batman. You need to be on top of the roof. You need to pull out your microscope. You need to pull out everything, your binoculars, and scope it out. See how many of these guys are in here. What's going on exactly? Do I have the right tools for the job? What happens if I get hit? Do I know that I train enough? So if I take a hit, I know how to move and counteract, right? I know how to move in this situation. I know how to battle because this is what I'm walking myself into, a battleground. Right? So you got to prepare like Batman. Don't be running in there like you got an S on your chest because you don't. So then take the time and learn and prepare. Because again, how does Batman even get mentioned in a situation with a god like Superman? Because he's so prepared that you got to respect him. And that's how I want you to be. So prepared that we have to respect you, that you could walk into a room and you could see Warren Buffett in there, Elon Musk in there. You could see Jeff Bezos in there. You may not have accomplished what they accomplished, but guess what? You prepared and you were meant to be in this room, and that's how you got in there. And I want you to think like that and know who you are. Because what if, again, Elon Musk didn't think he was who he was? When you go back and you look when Tesla went public, and I want to say it was 2012, family, nobody was on Wall Street with him when he was letting Tesla out public. He was just out there. I think he was wearing like blue jeans, and a random guy on the street like recorded him. And now he's one of the richest people alive. And everybody, he has to have like 12 security guards and ride in tenant limousines and things like this just to be protected. But Guess what? Back then, nobody knew who he was. What if he didn't know who he was? He would have never became who he is. And you got to think about that for yourself. So hard recession, soft recession, wherever it go, just be prepared and say, hey, how do we be prepared? Let's get there. In a hard recession, what should you do? You should cash up. You say, oh man, I'm loaded up on cash, right? We've seen your Graham Steffens, your Meet Kevins, your Andre Jixon, people like this tell you how they was loading up on real estate in 2008. How they do that? They had to have the cash to put the down payments. Oh, so what if we get a chance? And then you know what? You live on a block, and let's say all of the houses in your neighborhood are $300,000, $400,000 now with inflation, right? And it all drops to 150. It's just a flash crash. 150, they 200 now. What do? Do you have the down payment to start buying a block? You see what I'm saying? You got to cash up. You got to be ready for this. What if you was waiting on Home Depot to come down? You was waiting for Apple to come down. You was waiting for VOO to come down. How you going to load up if you don't got the cash? Oh, you need the cash. That's what you want to think when you think about these hard recessions. And now to answer Larry's question and finalize it, what stocks should you be looking at? The ones, think about it like a kid, the ones you know and love. You got to think of it like this. You want to have these companies that everybody knows. I'm talking about if we walked into a school and there was kindergartners there and we say, hey guys, you ever heard of Apple? Yeah, all the kindergartners will say yes. We go to Harvard, we ask them if they heard of it, they're going to say yes. We go to the senior home, ask them if they heard of it, they're going to say yes. Oh, this is a world brand. They know this. They know Home Depot, they know Lowe's, they know all of these companies. And then a lot of them in all settings and all ranges are using these products to some degree. So then, maybe I should look more into this company because we're all using it. Why are they just making money off of us? You know what? They are making money off of us, meaning Apple. But once you start to own Apple, you become a part of they. So when they own it, you also own it. And now you make money when they make money, family. So just think of it just so simple like that. You want to be prepared like Batman. And you want to say, I don't always have to go to the hype kind of thing. I don't always have to look for the little micro stock that's going to blow up today. There's always going to be another one of those. It's okay to try to make some money on them. But you got to at the same time say, I'm really going hard, though, and owning more of the companies that I like, that I know well, and that I love. That's all I got for you, family.
Hey, Mo, I want you to get ready. My question to you after Josh, Mo, you get ready. Do you think the market has bottomed? That's what I'm going to come to you next. All right. But let's go, Josh, let's get this in the way right quick because Debbie Schultz want to know, why did you sell SQQQ? Before you answer that, I got two more questions. So shoot this one really quick.
Because we are in a micro bullish trend that has not been broken down yet. And so we pulled back to a reasonable area of support, and we likely should bounce. If the market were to break through 39.50, I would miss out on Q's jumping up to $41. But the risk was more likely to me that the markets would pump after this drop that we've seen for the last two weeks, and that I would lose and not lock in my profits. So that's the concise answer.
Yes. And so when you ask the question, I'm thinking one thing bullish, and I said bearish, but I'm thinking bullish because you said exactly what you did. You was selling SQQ when you was buying Baba. And I bought some Baba. Someone asked me on my live, what do you think of Baba? I said, I think it's going to be a pop. I said Baba, and I believe I say Baidu are two that are popping, right? So question.
Larry, I was looking at Baidu as well today, just as a side note.
There you go. There you go. So we got the same mind frame. All right. These are some of the things I'm sounding like, you know who, that you're going to learn in the class. All right. Let's keep it going. Josh, do you think crypto has bottomed? Number one, because I want to give the people a lot of information. Number one, do you think crypto has bottomed and why? And then after that, what is your top two cryptos?
Wow. Everybody knows that I am bullish on crypto right now. And I'm going to say that, yes, I believe it has bottomed. I don't believe we're going to get back beneath 16,000. I think that we would do extremely well to have a buying opportunity at 18,000 overall. I think the bottom's been in for months now. And if you look back on the chart, you see that it has been steadily making higher lows, creeping up until it took off. And even if the markets were to fall apart in the next 6 months, what I want everybody to walk away with who owns crypto tonight is that does not mean that we're going to come anywhere close to the bottom that we made in before December of 2022. Okay. So the markets can go into a recession, even a hard recession. And that does not mean that we're going to get back to the bottom that we saw in the past. My top cryptos, I would say that I've stopped buying Bitcoin because I have a very large position in it. Right now, my two favorite cryptos to buy that I just feel great about are Ethereum and Polygon Matic.
Okay, so now I want to say something off the record here. Queen, we all love you, man, because I see Queen on all of our pages. Queen, you are a queen, all right? But listen, somebody said Stockmo looks like he's tired. I'm going to talk about two people. I'm going to take my hat off to Stockmo and Stocks with Josh. And this has nothing to do with stocks, but Stockmo is a freaking centurion soldier. He has COVID, and this dude is still pounding them out. I saw him yesterday, and he was saying that he has COVID, and I'm like, dude, I was sick for him, and he's still pounding them out, video after video after video. You guys have no idea how much time this takes. You're never off. You're on 100%. So hey, let's get some Tesla's cats in there for Stockmo, man, for even being on tonight. The man did 2 videos today, studying all night. The man literally are in the throes of COVID, and he's here. So let's show Stockmo some love. I appreciate you for being here tonight, Stockmo. You are awesome.
I appreciate it, but I want to show everybody out there, I always tell people, don't go by the words people say, go by the actions people do. And for those who follow my channel, Larry's channel, any of the family here, Keenan, Josh, we're all best friends. All right. I would do anything for these guys. I know they'd do anything for me. And I will say this, if these guys ever need anything, I would be there, no matter if I'm sick or not, because that's the kind of people that I like to surround myself with, is the ones that would do the same for me. And so I grew up a working blue-collar family, a family that you go out and do your job. You don't make excuses when roadblocks are thrown in front of you. I feel like crap right now. Doesn't matter. The family needs me. I'm there. And that's just not words. I can say whatever I want right now. Go by the actions. Go by what I do. And the fact is that any one of us, you're going to run into things that bother you. You go to work 40 to 60 hours a week. You want more. You want a better life. You work more. You do more. You push yourself harder. You do the things that you don't think is possible. And remember, every job we have out there, every career I've ever had, every salary, every paycheck, every hourly wage, all it is, it's a drug to kill the dreams that we have. It's enough to make us comfortable in our life, and we need to get away from that. We need to push through and create our own businesses, create our own dynasties for our family,
Yes.
Our own financial freedom. And you don't do that working 40 hours a week for somebody that doesn't respect you until they'll tell you they do. But until something happens and you're cut because, well, there's a recession, we don't need you, bye. You know what? Stop. Make your own future, my friends. And if you're sick, I get it. You need some time off. I get it. I'm the kind of guy, if I can get on my feet, I'm going to be out there pushing and trying to help my family make it to the next level. And so I do appreciate those kind words, Larry. I really do appreciate that.
Man, and you know what, Josh? Just tell them, I know you shared it on your page, just real briefly, to you tell them what I'm not at liberty to tell your story. Tell the people what you are doing. Tell them what your last week has been, and tell them what you're doing.
I'll give the very quick 10, 20-second overview. We didn't have plans to do this, but over just about 2 weeks ago, we got a call from family, and we needed to fly out to Peru to bring my father-in-law back. We brought him back yesterday. We're going to take him to the emergency room because he needs to get, diagnosed at this point to figure out whether we've got days or weeks or years. So it's been a whirlwind. I still had time while I was out there, while we were just packing things up slowly and kind of saying goodbye to people for him. I still had time to make some videos, but I am very happy to be back here in the States. And even though I will be making videos, my number one priority is my father-in-law right now, and we're going to try to just make sure he's set up correctly for this this part of life's journey.
Says Stock Mo is always the educator. Yes, he is, man. You're not gonna outwork Stock Mo. Forget about it.
No.
Don't even try it. You're not gonna outwork Stock Mo. Don't even try it.
And I will say this, Larry.
Yeah, go ahead.
Prayers to your father-in-law, Josh. Seriously, family's first. I'd do anything for any of my family. Friends are my family, and I think a lot of people out there who follow us know how I feel about that. Above everything I do, I can eat chicken nuggets, Pop-Tarts, and some Pepsis every day and be the happiest man in the world. I don't need anything. The work I do is because I'm driven to help my family and my friends and those around me. And that's the truth. Like it or not, I don't care what anybody says. It's the truth.
Yes.
I'm still sitting in the 1972 brick basement. I love it. I don't need anything else in my life except good family, good friends, and just the ability to help others out there. And Josh, I hope your father-in-law gets that help. And sincerely, I think we all should throw some prayers in the comments, and hopefully he'll get better.
Yep.
Thank you.
Someone asked what I think about NVIDIA. I think NVIDIA, you're not going to have ChatGTP, what are all of these other names, everything. NVIDIA is a long play for me. I'm just answering this one question. NVIDIA is a long play for me. I just been waiting, me personally, for the right price action. But I'm DCAing in the NVIDIA, and I plan on having NVIDIA, me personally, for years to come. Stock Mo, while we got you up, do you think the market is bottom, and if not, when?
Nope, not at all. Not even close.
Thank you.
I know we're going to have different opinions on this. I'm going to tell you right up front, I don't even think we're close to a bottom. This is pretty much, in the last 12 years, the most negative I've been about this market. Anybody that's been in my channel knows that I have been one of the most optimistic people from back in 2020 up to a certain point. I told you if the underlying economic situation deteriorated for the U.S. economy and the global economy, I would let you know. Right now, everybody has that feel good because they watch the stock market go through the roof. Every metric, every piece of data I am seeing is screaming that we're going to have a recession. And then I hear this silly talk about no landing. There's no such thing as a no landing.
Thank you.
What you have is either a hard landing, you have the soft landing, and that's it. That's the two. And what do you mean? Well, I hear this no landing. Well, somebody wants to get famous on creating some word that doesn't exist. That all that is a continuation of the current bull market that we've been in the cycle of the economy. That's not a thing. You can't just put a name to something that's a normal part of this cycle. And I got so irritated when they kept everybody saying, hey, well, there's no landing situation. No, there's no such thing. And if that happens, the market continues higher. Inflation then continues higher. It's the normal cycle that we're already in that the Fed's trying to beat. And so all you get is, well, the Fed has to get even more aggressive. And what that means is that you are even higher risk of a serious hard landing. You're going to get a serious recession. And so somebody making up a term for what we're already in,
right?
I shake my head. So I'm a little irritated with that. So it's either soft landing, hard landing. And I'll tell you what, I'm not going to have a soft landing. That leads us to hard landing. And now the question is, how hard? Are we going to have a minor recession, a major recession, a middle of the road recession? Well, a lot of people watching this channel right now never truly been through a recession.
That's the truth.
That's the truth. There is no such thing as a mild recession. We're talking unemployment goes through the roof. Family members are losing their job in a mild recession.
Tell them how quick. Hey, Mo, tell them how quick it takes. Mo, tell them how quick it takes, how quick unemployment ramps up.
It will skyrocket overnight. You're going to see jumps that you haven't. Oh, we talk about 0.1%, 0.2% change in the unemployment. No, you're going to see clips, 0.5% clips. And it's going to be like, what's going on? And all of a sudden, in one quarter, you're seeing 1-2% moves. And it's like, whoa, everything's shutting down. Yeah, because
there are corporate buildings, right? There are corporate buildings on the East Coast that got shut down in the recession. And they just a ghost town now, right? Still from back then. It's just they had to move out of the state. And you just see all of these like abandoned like corporate offices. And it's crazy all over the East Coast, family. So recessions are really, really detrimental. And it's literally like a ghost town when you go and look at some of these places. So it is real and it's real scary. And understand this, that everybody, like Mo was just saying, they just cut you off out of nowhere. You were thinking you were planning on living or working this job for the next 30 years, 40 years. Boom. Next thing you know, you on the chopping block because you are not as important as the profit margins. So then they let you go. And it's as simple as that. So again, even hearing the term soft recession is kind of like just a weird thing to put together, right? It's like
I have a
it's like
minor heart attack, a minor
a
stroke.
minor
No,
heart
no,
attack.
no.
Yeah,
Yeah,
he's
there are
salty.
serious conditions.
Hey,
we're not
Mo,
gonna curse on here. We're not
Mo,
gonna
it
curse
was a
on here. But
soft
you know how they
death.
say, you know how
He
they say
died
you need a
softly.
Soft death.
you
It
need
was
a
a
good
soft death.
ibuprofen.
She's kind of pregnant.
Yeah, right.
Are you pregnant?
That's a good one.
Kinda. Yeah,
Right,
yeah.
right.
You just
Like it just don't make sense. It don't make sense. So it's putting those words together just really, really don't make sense. So I get it because we're just trying to describe certain things, but it just when you really think about it, it's like you know what? It's do you want to get shot in your right arm or your left arm? I don't want to get shot in the arm.
well,
Right?
Right.
You don't want it to happen.
he only got shot in his leg, not in his arm, not in his hand. Oh well, you're right. I'm sorry. I thought it was bad.
He got
I guess-
shot.
Right,
Well,
right.
it was
We
only
thought-
in his
we thought
leg.
we needed to call 911 for a second. It's cool.
Yeah. No.
Hey,
Well,
let
to
me clear. Go ahead.
I was going to answer the question no, because you said, do I think we hit a bottom? No. I'm going to put this out that I put it out to my family. One, I think we are going to get back down to 3,600 in the S&P 500. But with that being said, there's no guarantee it's going to happen this month, next month. I will say this. I do believe that we will get down to 3,600 or below no matter what. That means 3,600 range by the end of this year. In my mind, I put that up there 90% chance of happening. I think the other side of, hey, well, we have a soft landing. I don't see that happening, but we'll give it a small 10% chance, 1 out of 10. And I'm not betting on it. I have most of my money into that. We're going to have a hard landing. And that's why I think right now the treasuries are screaming opportunity more than they have in the last couple months. And so I am loving everything I'm seeing from that. I did a major amount of research in the last 24 hours after it clipped up over the 2-year clipped up over this November 7th and then bounced back down. It tried to break through. It couldn't. And I love that. When it rolls over like that, oh, that's screaming. Folks, we may have hit a little top for some of these different years of the treasury. So I got a lot of opportunity. And I'm telling you this, all these minds together tonight. I'm listening. Keenan, Josh, Larry's course. Get in that course, folks. This is what you got a team in there with Josh, Keenan, and Larry. My goodness, man. I might sign up because I want to see what you guys put together. So hit the like button. And the fact is, we haven't hit the like button enough, family. I thought we were a family here. Hit the like button. Hit the subscribe button down below for all 4 of us. Help us out. Join Keenan's Patreon. Join my Patreon. Get in the course. And more importantly, bet on yourself. Bet on yourself. Stop
people that are
taking other people.
People that are taking Mo's Discord, it's like you literally can mimic with your own availability to your money, mimic his plays in his Discord, right? And so you could say, if you really want to learn about triple leveraging, if you really want to learn about those things, how to really, really, really amp up. When I go into a triple leverage play, I'm not getting into it until I check with Mo first. I use these guys. I use these guys' strong parts. I use the things that are strong. And yes, I made money for years before I met these guys, just like these guys have made money for years before they met me. But let me tell you something. If I am a finger and hand specialist and I'm in the room with a brain surgeon, if I have a headache, I'm going to ask the brain surgeon. So that's why I draw from these gentlemen. We all have our strengths.
I had a best friend called the brain surgeon. It's funny to hear you say that. He was a football prognosticator. And man, anytime everybody's like, hey, I might go bet a football game, we're like, you better go talk to the brain surgeon, man. No one does that in this town unless you talk to him. So
There you
I'm with you,
go.
Larry. You don't go into an operating room, and if you got a headache, you want to talk to the brain surgeon. So
There
I
you
agree
go.
100%.
Hey guys, since we're
Yeah.
getting close to the end of this, I wanted to mention this because I almost forgot. Right, this is quick.
All right.
So I seen a few news pieces coming out, and this is what is causing a lot of the market fear. So you've been hearing about the Fed meeting, right? The Fed, their minutes, they're talking to each other, right? They're saying that almost all Fed officials, and I'm reading this,
Except
backed
two.
a 25 basis point rate hike last time. It was almost unanimous last time. So it was a lot of certainty. So we were seeing it going up in the market. But now a few of them are saying we might think about 50. So remember, the market does not like uncertainty. So now
Right.
we're seeing the negativity. Before
Hey,
we were all pretty sure, and now they're a little uncertain as to which way to go. We'll see when it comes out, but that is what's struggling in the market right now. Is this really they're thinking? Because this recession is not like other recessions exactly. Why? Because the Fed has more control over this one than they did, because before they were being way reactionary to the economy, was just crazy. Now they're being reactionary to inflation specifically. So then this one is a little bit different. So then they're trying to do this balancing act so that everyone is paying close attention to how the Fed, even the words that they say. And it's not even just people like us listening to what the Fed is saying, they're
right.
algorithms. So you know how if we start playing some music in the background, do you think the headquarters at YouTube is listening to that? No, the algorithms are listening for copyrighted music. Right? If we start cursing in the videos and it gets
Right.
demonetized, you think YouTube is listening to that? You think the people who like you and follow you are flagging your videos? They're not. How is this thing getting picked up? The algorithms. So in the stock market, though, the institutions, the people who really are putting billions of dollars into this, because there's hundreds of billions of dollars for them to make, they have algorithms that are literally listening for the Fed to say specific words or specific phrases or specific strings of words. And these types of things are how you see those flash crashes all of a sudden and then flash buys. Because for an algorithm and algorithmic trading, you may have heard of it, they can do like 100 trades in under a second. In and out, 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 in and out. And made money both directions, family. So you really got to think about what's going on with the Fed. Because I actually seen somebody say, you don't have to focus on what the Fed is saying, just DCA, right? And I'm thinking, wait, it sounds good. It
Right.
sounds really,
Right.
really good. I hear
You better
you.
listen.
I hear you. But why would you choose to be uninformed when you
Right.
could be informed? It just makes
Right.
no sense.
Hey, I want to say this, and then I'm Josh. I want you to tell us what the charts say. So I want you to start getting that ready. But listen, I'm gonna have my little say right now, and then I want to just comment on something. Number one, Keenan talked about that in the Fed meetings. There were two Fed that want 50 basis points in March. It's two of them, Mastert and Bullard. And Bullard is a bulldog. Bullard is hawkish, and Bullard carry a lot of weight. So that's why the stock market is scared of Bullard, right? Because remember last quarter, he crashed the market. It wasn't even, the Feds weren't even talking. Bullard made one comment. You guys remember that? And it crashed the market. It crashed the market that day. And so that's why we're having this negative run today. Okay, here's my 2 cents, and the rest gonna be to you guys. Listen, here's why I see the overall market. Just like Josh said, we all agree. Still in the micro, looking at a microscope, it's bullish. The
Yes.
news came out, the Feds came out, and his minutes were released. We thought it was going to be pretty damning, but it really wasn't that bad. Market came down a little bit. It really wasn't that bad. And so minds like Josh and mine and these guys, we go, okay, we see another day to live later this week. So we can drop our SQQs. We can do a TQQ. We can do a Tesla call because there's something called Tesla Day coming. We can do a Baba call. We can do a Badu call because we're expecting a bounce, right? So now, for those of you that are new, that does not mean that we see green pastures for the rest of the year. No, not at all. I see a downturn for the rest of the year. The 10 and the 2-year yield curve is is still crazy inverted. So with a microscope, okay, it looks negative. With a microscope, it looks bullish, right? But with a telescope, it looks, I'm sorry, let me pause that. With a microscope, it looks bullish. With a telescope, I keep saying that backwards, Josh. Could you help me out? In the long run, that's a telescope.
Yes.
That looks
Yes.
bearish, right? But with a
You got it.
microscope, it looks bullish. I was saying it right. It wasn't connecting, all right? So this is what we see. So what do we do when it's like that, Larry? Me personally, anything I say is not a suggestion for you to buy, hold, or sell. Me personally, I get in, I take profits, and I get out. If you don't hear anything from me tonight, and this will come back to you down the road, you're going to be saying, I should have took profits, and I should have took profits more frequently. So what I'm saying is, we run these rips up, we take profits, and we come back out and we chill like a squirrel. We gathering nuts, right? And then we see another day to live. We see in the micro that's going to be bullish again. We get into some of these plays, we take our profits, and we get back in. But long term, I'm holding cash because I believe that there's a downturn coming. Now, a lot of the analysts are saying the second half of this year. Me personally, I think we're going to get a sign after Q1 earnings. What we are heading into, according to people that are smarter than me, is called a earnings recession. Meaning these companies are giving lower forward guidings on their earnings, and earnings are going to come down, right? That's going to force the stock market to start trending downward, okay, in a downward spiral. Also, too, we have the geopolitical situation ramping up. Putin is not happy that the president went over there and kicked it with Zelensky, okay? I'm just telling you, there's a lot of things in the long term looking through a telescope that don't look good. So don't be fooled and think that all of the pastures are green for the rest of this year. And I agree with Mo. I believe short term we're going to have a bounce, but I believe long term things could get so bad that the Fed could be forced to pivot, even though he says he isn't. All right, I'm done. Josh, let's go.
Okay, well, I'm going to make some predictions, and I'm going to, give you guys some thoughts on where I see things. What we have to do to continue any form of a bullish view is we've got to make some room to move back up above the 41, 42, 4,300 on the S&P 500. Now, if we fail to get back to 4,200 and break above it and break above 4,300, if we fail to do that, I think we're absolutely going to make a new low. However, keep an eye on this. If we do get above 4,300, okay, somehow things are bullish, the Fed decides not to even do a rate hike, at the next hike session, we blast up, then I still believe that people should not FOMO in because we will come back and we will test a lower range, but it will not be as low as we saw in June or October. So to be very, very clear, if we stay beneath 4,200 right now and we continue to break down, these markets will go down about 20 to 25% from where they're at. That's my solid prediction. If we can make a higher high above 43.25, I still think that we're going to come back and probably test 38. So it doesn't mean that if we break above 43, everybody should load in and buy up. But I believe that,
Josh, I'm sorry, just for the newbies, could you explain to them when you say 48, could you explain that's the S&P and all of that?
Yeah, I'm talking about the S&P 500 as measured by the SPX. You could also go with the SPY. You could call it 420. You could call it 430. But in general, we have to keep this in mind. This is the number one technical thing I want people to absorb tonight. We had a low last year, mid-August of we'll call it in the SPY 430. Okay, it would be 432, I believe. We had that last August. Until we break that, we are in a very clear and obvious downward trend. If we break it, then I will say right now that the lows that we had in June and October will be the market lows. If we fail to break above that right now in the next 30 days, then we are absolutely going to go down over 20% from largely where we're at.
Please say that again. Say that
Well,
again.
yeah, I just want to keep it very clear. Right now, we're at a critical point. We are expecting a bounce around 4,000, around 400 on the spot. If we get that bounce, then we are continuing from the market low in October, and we're going to continue to drive up, and we'll have to then defeat 4,325 to break that and make a new local high. If we break down right now and we don't go anywhere back above 4,100 or 4,200 or 4325, then that market is telling me with what I believe. So this is what I'm going to do with my money. Okay. I believe that we will then make a new low, which our last low was roughly 3,500. It was like 3,490 something, but we will make a new low beneath 3,500. And that's something that I will then begin to pull up and go save cash and wait, buy more puts, pick up more SQQQ and SPXS, and I will drive it down till we get beneath 3,500 before I go long again. So I just want everybody to have that benchmark. We have to hold 4,000 and we have to make a new high above August's high of last year. Otherwise, we are going to make a new low.
I hope everybody write that down. Please, guys, we're giving you this information not to tell you what to do. You have to, do your own due diligence, but take this information. None of us want you to lose one red dime. But on the flip side of that, we want you to maximize your earning potential. This is all we talk about, is how much we could help you guys. Because if you win, we win. When I travel and I go out and I see almost every day somebody recognize me and they go, hey, Uncle Larry. I go, how's your stocks doing? My wife's tired of it. I'm like, how you doing? Like, what can we change? That's what we're all about. Josh, while we have you up, go ahead and do your sign off. Say whatever you want to say. Go ahead.
Yeah. All right. You guys, some of you have heard this analogy before, but if you've never heard it before, just take a moment to take it in. We've all played Monopoly. I'm sure there's probably nobody out there that hasn't played a game of Monopoly in their life. And we know that at the beginning, we got to build up. You got to go round and round and you collect $200. Can you imagine if your strategy to winning Monopoly was to never buy any property, assets, or utilities, and all that you were ever hoping for was just to eventually gather that $200, right? But all along the way, all the rest of the players are buying the boardwalk. They're buying, Indian Avenue, and they're putting hotels on them and they're putting houses on them. And then eventually, if you have not done any investing in life, you find yourself with only a few spots. Like, you're saying, oh, I got to roll a 3. Otherwise I'm out. Okay. Well, wow. I just want to make this comment. Okay. Buying Larry's class, right? For me, I think for some, it's not a lot. You're not buying boardwalk. You're not putting a hotel on it. It's kind of like buying a utility. When you buy the utility in the game of Monopoly, you don't get much. There's 4 of them. They're kind of cheap, but you still want them. That's where you can start for some people who have not gotten, they've been going around collecting their paycheck and not building generational wealth yet. And there's no way of winning this game without getting into real investments and real ownership positions. And I would say this, you make a small investment in buying something that's going to build you slowly towards real wealth. You have to make investments. And that's how I view Larry's class right now. And I'm going to say this because I did some classes on technicals for Larry. And I thought a great deal. I took my many years of investment experience, and I thought I told people when I was doing the class, I'm talking about the moving averages, the RSI or the MACD. I said, I'm not going to give you the math on this. Go find the math somewhere else on YouTube. I'm going to tell you what you need to know about this to make money in plain, simple talk. And at the end of each of my segments, I gave everybody what I call a pro tip. I gave everybody what I called, okay, well, here's this indicator, but here's how you use it at a more mature way of trading. So yeah, I'll say this, Larry, I don't know what you're charging. I didn't see the price. I saw some people asking, but no matter what it is, personally, I think my videos are worth that amount.
I like that. Hey, we got Keenan coming. Appreciate you, Josh. Hey, listen, the price that I have on it is only going to be for 30 days. It's $100 off right now for you guys. Hey, while we were talking, we were looking at NVIDIA. Keenan, hold, let me show you this. This just came over Moomoo app. Look at that. Wall Street today, NVIDIA, which had their earnings, right? Today, right? Gains after AI computing demands help lift forecasts. We were just talking about that. I just said I'm into NVIDIA because you're not going to get any of this chat GPT and none of this without using chips, right? So when we talk to you guys, we're giving you the playbook every day, all right? So, hey, Keenan, give them your sign off, man.
All right, family. So, long story short, we appreciate you for hitting a live. I'm looking at the likes and I see we are at 1,000, but there's like, what, 1,900 of us in here? Let's see if we can get it to 100 more or 200 more likes than this, just to show Larry some love. Shout out to Larry for bringing us all together today. And I just wanted to say that I want you to just take the time and bet on yourself. There's been times in the past where you say, you know what, maybe tomorrow, maybe the next day. Oh, I don't think I could do it. Let all of that go and start fresh today. Bet on you. What does betting on you look like? It looks like, you know what, I needed to do this one thing. I'll do it tomorrow. No, I'm doing it today. I was thinking I'm asking my boss for a raise. Look, we coming into recessionary times. Listen, you know what you're worth. You know what I'm saying? You need to ask for what you are worth. And if not, maybe you need to go and look and get hired on another job. Sometimes that's how you make more money, family. Start betting on yourself. Start believing in yourself. Just because the world is challenging, that don't mean that it wasn't meant for you to dominate this challenge, family. So bet on yourself. That's what I got for you.
My man. All right. Mo, talk to us.
Yeah, just real quick, Mike. Yes, I'm an SPXS. I saw him putting something on there. It's triple leverage for the S&P 500. I'm also in the NASDAQ 100 with S in the Qs. I got a lot of the treasuries where I've been putting my money lately over the last 2 weeks. You heard my spiel on that. Now, I agree 100%. I used to tell my students, no one's going to go out there and open the door for you. You got to kick it in. You got to kick it in with force. Every day you wake up in the morning, you know who's going to make you or break your day? It's not anybody else in the world. I don't care what they do to you. It's the person staring at you in the mirror. Look at that person, motivate that person, then go out and do more than you even thought you could imagine. And that's the truth. And no matter what you come down with, you're able to fight through it and get to that next level. Remember, judge people on their actions, not their words. Work on your own self-worth, work on your family's financial well-being, and you will have the right goals in your life. Surround yourself with people who help get you to the next level. Don't surround yourself with people who like to rip and tear you down by going out and partying and just doing all the fun things in life and not caring about the other important things. Surround yourself with people that make you a better person. And I think you'll find out down the road that you are. And that's the good news. So I do appreciate Larry. I'm very impressed that you got us all together, Larry, man. It's been rough out there lately with all the things going on with all four of us. And
Yes.
Every time I get together with these guys, I just absolutely love it. So congrats on the course, Larry. And I really appreciate the family. And like Keenan said, hit that like button. Let's get that up there. And I can't wait to get together again down the road here.
Hey, I appreciate you, man. Praying that you get well, Mo. Listen, this is what I want everybody to do, right? For those of you that don't know, and I don't know why it's not coming up full screen. If you're on your cell phone, I want you to go here where it says show all. I want you to go right here, right? And you see where it says Stock Mo. I guess you can't see it. Well, this is Stocks Mo's link, Keenan Grace's link, and Stocks with Josh's link. I want you guys, the first thing, before you even download the class, I want you guys to go to these gentlemen's perspective pages and subscribe. If you're following me and I've helped you to make money, then Josh is just going to help you make more money. Mo's going to help you make more money. Keenan's going to help you make more money. It's just that. And I'm taking my own class. I'm taking Josh's and Keenan's classes. I'm going to be taking them too because there's so much to learn. There's so much to learn. I'm going into Mo's Discord because there's so much for me to learn. I've learned a lot from Mo about bonds. When we're not even live, we talk about bonds. I've learned a lot about bonds from Mo. I'm just telling you the truth. I don't know it all. And so I'm just telling you guys, diversify your information. And in closing, I'm going to say this. We got some green days and we got some red days. What's going to be tough is when we finally do go into the recession. Now, here's one of the things I do believe. I don't believe it's going to be as long, as sharp, and as deep as 2008, right? I don't think it's going to be that bad. But it's still, a recession is still bad, period. Don't get it twisted.
I agree. I agree with you.
Thank you, Mo. But what I'm going to say to you guys is when nobody want to touch the stock, that's when I'm going to come on. I'm going to go, hello, hello. It's time to buy. It's time to buy right now. You know, Josh said that when I didn't want to touch crypto, was like, Josh was like, okay, now it's time to buy. And Stock Mo, Keenan, and myself, when this market bottoms out, we're going to be saying, okay, guys, can't hear anybody. It's time to buy now, because that's going to be the tough part. So we got to do reverse. We got to think. Go ahead.
I'm agreeing with you, Larry. There's going to be really, really big money to be made, big opportunities. And I think you're going to get these alarms sounded by the four of us and from different perspectives, just like you said.
Yep. And that is so true. And so now we're going to lead the troops, and you guys are going to have to become firemen and firewomen, meaning you're going to have to run towards the fire, because that's going to be a fire sale. I'm telling you guys right now you have it in your mind, I'm going to buy. What I want everybody to do that's listening to me, rewind this video, listen to everybody's parts. Go back to listen to where Josh was talking about the S&P 500. But right now, as soon as this video is over, I want everybody to draw a chart and start to put in not just what stock you're going to buy, but how much of each stock you're going to buy. One of the things that I do, and Josh knows that I do this, in one of my portfolios, I keep a fractional share of everything that I'm going to buy when the market crashes. That's what I do. When we go into a deeper recession. I got one share of everything. Actually, it's a fractional share of everything in my Fidelity. So I don't even have to look at a chart. I'm going to just go, boom, what is it? 3,200 S&P. Buy. And just be ready now. Don't wait until the hammer drops, okay? All right, good people, we're going to leave it right there. Hey, this has been great. I respect these gentlemen. And I see questions about the class. Just check the top link in the description below, and everything is explanatory there. We have more tools to help you guys with. And remember, I know there's somebody out there saying, you got your family, your loved ones, your girlfriend, your boyfriend, your husband, your wife, saying, why are you wasting time with this? The stock market is a scam, blah, blah, blah. Since 1792, stock market has rebound 100% of the time. The people that buy low and sell high make money. And you can do that for the rest of your life. If your money is not making money for you, if your money is not working for you, you will work for your money for the rest of your life. And that is the truth. All right, good people, live, love, laugh, and learn. We'll see you later.